Have you ever looked at your business bank account and thought, where is all that money actually going? If that's you, understanding your chart of accounts is the first step to making sense of it. Welcome to Buttons Academy. This is part 2 of my Accounting Basics series, where I break down accounting into bite-sized, doable steps so you can feel confident managing your finances, even if numbers aren't your thing. Today, we're covering one of the most useful tools in bookkeeping, but also one of the most misunderstood. What is chart of accounts? A chart of account is a structure behind your finances, a list that organises every single pound coming in and going out. It shows where your money is being spent, where it's coming from, and how it's being categorised. Here's the core structure it follows. Assets, what you own, like cash, equipment, or inventory. Liabilities, what you owe, loans, suppliers, bills. Income, sales and earnings. Expenses, the cost of running your business, rent, advertising, and software. Without a clear chart of accounts, your reports can quickly become confusing, and tax time turns into guesswork. This is where structure equals clarity. Why it matters. A well-organised chart of accounts makes your life so much easier. You'll see where your business is thriving and where it's costing you. Tax returns will feel far less overwhelming. You'll stay compliant with Making Tax Digital, rules for VAT and income tax. It's not just about tracking, it's about understanding. Default versus custom accounts. Most software gives you default accounts to get started. You'll see things like cash and bank accounts, accounts receivable and payable, sales income, and general expenses. But here's where things often go wrong. Businesses sometimes create too many hyper-specific categories that end up making reports a mess. It's easy to think more detail equals more control. But actually, examples of what to avoid. Breaking sales into retail, website, and online instead of one clear sales income category. Splitting rent into office rent and studio rent, warehouse rent, instead of one rent expense. Too much detail can slow you down and confuse your reports. Keep it simple, clean, and focus on what helps you make better decisions. Common mistakes businesses make. Creating new accounts for every little thing. Misclassifying expenses, which throws off your tax figures. Skipping regular reconciliations, leading to inconsistencies. Forgetting to map tax categories for VAT submissions. The good news, every single one of these is fixable. And once you've got your chart of accounts sorted, everything gets easier. If this helped clear things up, give it a like and subscribe for more straightforward tips every week. Got a question about your own chart of accounts? Drop it in the comments. I read every one and I'd love to help.